Hello, it is the 4th of July 2012. It is a Wednesday. Quick look at the silver markets. But before we do, it's not hard to find this code, which is what the one that I'm using would be, not the futures market, but the code of XAEG/USD. You can find these very easily. You can also find the gold one, which would be pretty much the same thing. XAU. X, I guess, is the exchange code used within the periodic table of elements, because AG stands for silver on the periodic table of elements, where AU stands for gold on the periodic table of elements. There's no, the US dollar is not on the periodic table of elements, so they just type in USD, I guess. But with that being said, there's a few things that you're not going to find in these, you're not going to find it all. Maybe you're not going to find XCU/USD. I say that because CU is the two-letter code that's used for copper. But you're not going to find that on the exchange. Yet they say silver is not money. Interesting. Okay, let's take a look at this chart setup. The 18-period average of highs right now is in place at 28.01. Today's lowest price as of now is 28.05, or 4 cents above that level. And today is the 4th of July. The markets are probably going to close like any time. I'm doing this shortly after 9:40 a.m. Eastern Time. And I don't know when it closes, 11:30, 12 o'clock Eastern Time, but with the U.S. holiday, it probably will. So it probably will stay above 28, and of course even that 28.01 level, and stay below yesterday's previous high of around 28.46 or 47. But what I'm looking for is one full day above this 18 average of close, because that hasn't happened yet since this decline has started. It was close here, but no. That's the biggest close above it we've had, and we have to have a decent close for that to be the case. But its instant move afterwards was to go back within the range, and well, that wasn't bullish at all either. But one day, this day, I'm not going to lead too much into it. Now, if tomorrow it can stay above 28 and maybe even rise past the 28.60, 70 level and close above, say, 28.35 or something, then I'd probably really like it going into Friday and the weekend. But of course, we'll have to wait and see how this all plays out as well. Of course, any further upside, the next significant level is about $30 per ounce. The previous Fibonacci level, it's now set at 29.98. It was 30 because the low, which was 26.15, got undercut by 3 cents. So this Fibonacci level got undercut by 2 cents. Let's take a look at this on the 5-hour time frame now. Yesterday, pretty much a perfect hit regarding this significant level. And now it's had a small pullback down. And yes, I know there's a holiday going on. But from this point, the analysis is fairly simple and ideal, where if it's not able to hold this level and it breaks below, then we'll be looking for this level here to get tested, which is set at 27.5 pretty much. I got 27.52 written, but we can just make it 27.50 for making it easy to remember. And a move up towards here increases the chances that it takes it out. And if it does something in the nature like this, then this thing's going to be looking good to go to reach this previous high, which is 29.91, which also coincides with that 29.98 Fibonacci level on the daily chart, which we can just round to $30. So that would be the next significant level if it can break well above this level. Now, if we shorten this time frame out, just look at Fibonacci from here to here. So we'll instead of looking at the 5-hour chart, let's take a look at this on the 2-hour chart. And there we have it. So the next significant Fibonacci level is 27.55, which we'll just say 27.50 again. multiple areas where this level to be holding up into play. It's now coming back to within this moving average again. It's just probably going to go sideways for the rest of the session, but again, there's not much left within this session. And again, breaking down below that, then you got this little band within here for just showing you the exact same level being support on the same, pretty much on the same time frame, but different time frames as well though. So with that being said, we know $30 is the next upside target. The next downside target is $27.50. If $27.50 fails to hold and it stays below there for more than a couple of days, then obviously this is just continuing the pattern of lower highs that we've been seeing with all of these lower highs that are established within this market. But for this thing to get going, what it needs to do is, first thing, this thing needs to flatten out pretty much, and that's again starting to take place like it did in here. Then it needs to have a clear break and hold above it. It's not really doing that as of yet. And then have a decent size up move and either do one of two things. Either A, really make it a decent size up move with huge gains, or B, come back to the level, like say we did in here, then lift off, then you're going to approach the previous high, where you'll either immediately take it out, or maybe come back with a higher low, then take it out. So those are the types of setups that we're looking for. So if we just quickly again look at the 2-hour chart, just to see how that's worked out within that time frame, we can see here how it flattened out, established this resistance, and had a huge break above it. So that's that breakout above this declining trend that was going down for quite some time. Then within this point, we had the stabilization, comes right back to this band, and then it holds within the band, establishes resistance, and then it comes back up to this previous resistance, stabilizes, and boom, breaks higher. So that's pretty much the same sort of deals as I was saying on the daily chart as well. And thank you for tuning in today. Again, it's longer than I wanted. Wow, 455 seconds. Wow. Okay, take care.